Hello, everyone. Welcome to this episode of Everything Tax. Today, our topic is tax insights from the GCC and beyond. I'm Prateem. I'm a partner with Andersen UAE and lead the direct international tax practice. Today, we have a very special guest, Rahul Dinodia. He's the group tax head of a large diversified conglomerate. Rahul has close to 2 decades of experience in tax across 4 continents. Happy to have you, Rahul, with us today.
Thank you so much, Prateem, for having me. It's a pleasure.
Rahul, I think, like I mentioned in the title, it's Tax Insights on GCC. I would love to tell the audience and us about your journey in GCCs and some of the key highlights that you have experienced in this region, Rahul. Yeah.
Certainly. So my journey in GCC started with a Big Four.
Okay.
Wherein I started advising the clients across multiple different markets, including Japan, Korea, China, Southeast, MENA, GCC, Europe, Americas, you name it.
Wow.
And joining the Big Four was like joining an F1 race, wherein you have the stakes are high. You need to be highly precise and you need to be always on your toes. And after Big Four, I moved in-house, wherein I have worked across several industries such as banking, retail, some of the large diversified conglomerates in the region. And every move actually felt like adding a new chapter.
Oh, wow. I think, that definitely tells us that how much of a rich experience you've had in this region. And I think what's critical is I read, I would be very honest, I went through your profile, on LinkedIn, and I saw that you've not only worked on corporate tax or direct tax, right? You were part of even VAT implementation and implementation across, countries. How did that shape you as a professional? Because I think you came to this region at a very young age as well, right? And how has that shaped you, Rahul, as a professional here?
That's a very interesting question, Prateem, actually.
Yeah.
Being a part of VAT implementation, I would say, is like you're being handed over the key to the business's engine room, where you go through everything. You go through the revenue and you even go through the smallest expense. You are forced to understand how every cog turns. And when you get such an intimacy to the data, it provides you all the necessary insights that you need as a strategist. So I would say VAT implementation provides you opportunities to understand the business inside out, understand each and every transaction. And once you're done with it, you know it more than, say, majority of the people in the business.
And I think that's fascinating about any implementation process, right? I think when you're implementing something new, you get to know things about the business that, ultimately in countries where the law is settled and it's quite old, you only get fragments of facts and pieces that you get to know about the business.
Of course, I always believe that the best way to learn anything is just to fold your sleeves, get your hands dirty. Unless you get in the water, you don't know how deep it is.
I think we two share a very common motto.
Right.
Yeah. So I think, Rahul, you came to this region not in UAE, right? You came, I think, in Kuwait, and then, you have some experience in Saudi as well. How did those experiences and those jurisdictions shape you as a professional, and how is it different from UAE? How did that, because taxes are new to the region, right? So you saw the progression in each country.
That's true. Kuwait is quite steady. Kuwait is known for taking balanced and measured approaches, whereas I felt Saudi is in full gear.
Okay.
Tripling the VAT rate to 15% overnight was one of the boldest decisions And it was quite shocking, surprising to many, but Saudi did it. And I have seen the transformation of Gazette from Gazette to Zatka as being one of the most advanced and sophisticated authorities in the region.
Yeah.
And that transformation is remarkable. Today, if you go to Zatka's homepage, it's as close as an HMRC's homepage in terms of availability of data, availability of all the other necessary treaties, guidances, and you have it in English and Arabic both, which I have seen very few jurisdictions in the region reaching to that level. Now, coming to UAE, UAE has undergone remarkable changes. I think such a fast evolution that UAE has undergone is truly commendable. Here, the pace is incredibly fast. UAE, I have noted, is remarkably agile. The vision is unmatched. The way FTA has been issuing clarifications, circulars, FAQs, guidance, sometimes it comes even faster than you can even finish your coffee.
Yeah, it does.
And that is shaping UAE in a way that nobody, I guess, could have imagined. And I'm pretty much confident to say that with this pace and the initiatives the UAE government and FTA is taking towards digitalization, I guess UAE or the FTA would be ranked among top tier authorities in the world very soon.
Yeah. And I think that's a very valid point. So the laws here are new, right? And for in-house or any business, right? I think people must also remember that it takes time to ramp things up. And I think you're right. Like UAE, the pace at which it's going compared to countries which have had laws for hundreds of years, it's unmatched, how quickly they've developed. And with that, Rahul, you've seen even the evolution of corporate tax here, right? What would you say some of the key strengths of this corporate tax would be, this regime, and how does it compare with other regions in this, in GCC?
That's a question that's very close to my heart, Prateem, because what I have seen in other regions, most of the other authorities or markets, they see tax as a measure to diversify their revenue. Whereas what I have felt in UAE uses tax to even channelize more investments.
Yeah.
To provide more predictability, certainty to businesses, which the businesses crave for. And UAE is delivering it in spades. Few of the things that I like about the UAE tax law, the tax regime is it's quite generous. Even at 9% corporate tax, it's one of the lowest in the world.
Yeah.
Wherein you are increasing your tax base, but at the same time, you're also maintaining your trademark of being a business-friendly regime or a business-friendly market.
Yeah.
And some of the measures which the UAE government has taken, such as the generous carry-forward rules, the group reliefs, the benefits to these small business enterprises, the audit requirements for small businesses, the thresholds for multiple things. I guess they are taking a very pragmatic approach, and they are adopting the best practices without disrupting the business, giving ample time to everybody, every business to prepare for it and make sure that it is executed in the most seamless way.
And I think you're right. When sometimes I talk to, from a consultant's point of view, when I talk to businesses that are looking, maybe that are already set up here, or, the ones that are planning to set up here, right? And come to the UAE for the first time, I'm going to explain the law and what it has, the features of it. they go like, wow, this is such a progressive law. Yeah, there are some areas, and that is what my next question would be, that there are some areas where I think we are waiting for some more guidance to come in. Rahul, what do you feel, some as an in-house tax expert, what additional clarity or guidance do you want to see from the corporate tax law from a business perspective?
Of course, as we all know that the taxes in the region is evolving, especially in UAE. It's evolving at a very fast pace. So there are areas wherein certain more clarification and guidance is needed. And I would say that would be the next innings in the UAE tax evolution. Areas such as the interplay between free zone incentives with Pillar 2. Areas such as clear frameworks for bilateral agreements, adjustments, comprehensive adjustments, APAs, prevention of double taxation, or the way you basically put to test all of these treaty measures or all of these clarifications that have been issued. Those are definitely going to be the next inning that we are going to witness soon.
Yeah, and looking forward,
Absolutely.
I think for any tax professional, it's very, I would say right now, the UAE especially is quite exciting and it's challenging at the same time, right?
Absolutely. I mean, I have been hearing this from many people that this is the best time to be a tax professional, especially in the region.
Yeah, and you have so much experience, right, in terms of implementing new laws, and now it's corporate tax. Do you see somewhere where consultants fall short at times to support in-house roles, anywhere where you think that maybe something else could be done?
Yeah, of course, Prateem. And what I have noted is that happens because of the time pressure. Because consultants are also human beings like us, and they are also wearing different hats at different times, juggling with multiple priorities and commitments. As a result, they do not get the sufficient amount of time that they ideally should spend understanding the business. So in order to give a tax advice or any advice as such, any consultant should first understand the business.
Very well.
Now, because of the time pressure, what happens is consultants, they generally only answer the questions which are being asked. They don't answer the questions which are not asked. And quite often, the value lies there.
It's a very, I would say, something that I have personally faced also with, I would say, lawyers, right? Ultimately, you have to be very, very careful, and time is a factor.
Absolutely.
But on the flip side, is there anything in-house teams can do in order to work more effectively with consultants, Rahul?
Of course. So what I personally do and what I always advised others in my prior role to do is do your homework. Come prepared. When you are going to a consultant, you don't go with the mindset that you're outsourcing thinking. You are going to a consultant is just like you're going to a doctor. You need to state clearly all your problems, all the situations around the problem, and anything and everything that you think can help the person, help the consultant in giving you a better advice. So you co-work with him and you help in identifying the best possible solution to the issue for which you have reached out to a consultant. Consultant might be the expert in the topic, but he is not the expert in your business. So you have to work with him, alongside him, tell him insights about your business, specific challenges that business is following or facing, anything that you think could be a bottleneck in terms of execution, because I have seen quite often technically correct advices such as having dozens of different allocation keys and dozens of different markups. They are not really practical. And we have to look at it from the feasibility lens. And even OECD has mentioned in one of its guides that your costs should not outweigh the benefits. And accordingly, we should take it up with the consultants. We should clear or set the expectations very clearly from the beginning. and make sure that we are also a part of the process.
And very rightly put, I think, Rahul, sometimes I think when we are also briefed, right, we're briefed on the technical side and the technical questions, but the brief about the facts and the business challenges, with experience, you learn this as a consultant to ask that added question, but that comes as a force of habit. Okay, this is your technical issue, but what is a business consideration that you have? But very honestly, but that should come as a package as well. I think that would go a long way.
And right? Then only a consultant can also add value. You can think out of it as you're going to a doctor and you're telling the doctor that you have stomach ache.
Yeah.
You have to also tell the doctor, what did you eat at night?
Yeah.
And what you did not eat at night. And accordingly, the doctor can then understand better whether it's a case of a food poisoning or whether it's acidity or whatnot. Just telling that you have a stomach ache might not let the doctor have a full picture. Yeah. And accordingly, your treatment may not be appropriate.
And that's where I feel, and this is very important. I feel sometimes having that first initial call or a meeting is very important to discuss this. Like, the analogy that you used, a consultant would not, okay, so what did you eat sometimes? What did you do to arrive at this? So that's important. So when you start, where I've seen sometimes where things can fall short is when you're given a brief writing and just working on that basis. I think people should have a conversation, I think.
Yeah, absolutely. In summary, we can say you should not outsource thinking.
Yeah. True. And in this modern world, I think it's all the more important.
Absolutely.
Rahul, moving on, we spoke about UAE adopting corporate tax law, right? UAE is also adopting a lot of other global measures, with your DMTT coming in. It's already had CBCR regulations. So, Rahul, how do you see now this additional layer? Does it add to complexities, and how does it change what you do, Rahul, for your group? Yeah.
Well, Prateem, in one word, if I can answer this, it builds confidence. Businesses, they like predictability. They like certainty. They like transparency. Now, when businesses see that coming, it automatically helps in capital inflows. So when these measures are also implemented, businesses actually feel that whatever they are facing in their home country is going to be the same thing that they would eventually face when they establish a headquarter here or maybe a regional head office here. Because being in this part of the world, especially being in UAE, gives you a leverage which most of the other Western players don't have. You are closer to over half the world's population.
True.
They are within your reach in 3 hours.
True.
So it makes business sense to be here. And at the same time, when the laws are aligned with the international best practices or the international regulations, it actually gives a lot of comfort, certainty to businesses in terms of their treatments, in terms of, say, aligning their positions globally, and eventually it helps in preserving the cash flow.
Yeah, and very rightly put, I think beyond just tax regulation, I think UAE is doing a lot to attract investments and businesses. And I think it's just going to be exciting times ahead. Like, even if you look around, I think the last few years, you could see so much progress within the UAE and so much more happening all the time, right, Rahul? So yeah, I truly agree. And UAE has also announced adoption of, I know this is moving away from corporate tax, but also adoption of e-invoicing, which is soon coming. And then, like you mentioned, there's a drive towards digitization. How do businesses look at this? Are they worried about the time scale, or are they looking at this more positively and saying that, this is something that will give me more certainty and add to that, Rahul? Yeah.
Absolutely. That's interesting, Prateem. Any change is uncomfortable in the beginning. Similarly, e-invoicing is not something that is making everybody very comfortable, because you have to now kind of redo things the way you have been doing it historically. But one thing for sure, that such measures eventually would give a lot of real-time insights into how the business is performing, and at the same time would also give not just the authorities, but to everybody in the market, a much needed transparency.
Okay.
So as soon as your invoices are issued, you know that a copy of that invoice would also be going to FDA. So everybody would be taking extra measures to make sure that we all are compliant and we are balancing our obligations appropriately. And this would actually create, in the time to come, a lot more efficiency, wherein, by these measures, the time which is currently taken for doing the same task when it is automated and digitized would be reduced many folds, and businesses would be finding it easy to then run their operations. Of course, once this is implemented and executed, till then it's going to be
it's
difficult
a pain.
phase.
Yeah.
Yes.
So I saw this when I was in India, when they brought in e-invoicing. I think there was that pain of implementation, but now I would say majority of the businesses say that that was the way to go. Ultimately, it is just better.
Absolutely. You speak to anybody where these e-invoices have been issued already. The systems are so advanced. You have dashboards literally telling you everything about the businesses in real time, where your transactions are going, your receivables, your payables, your inputs, your outputs, your deductibles, non-deductibles, previously, which used to take probably weeks for people to figure out. And you have to spend literally efforts after the transaction. So it was kind of a post-mortem that used to be done. Now, in real time, as soon as it happens, it reflects on your dashboard, and that's when professionals can basically make the best use of their experiences by then helping the businesses with making the necessary analysis, forming the right strategies, and that'll definitely be a game changer.
Great. And Rahul, now again, shifting gears, right? This big 30th September deadline is fast approaching for both businesses and consultants. And just want to hear your perspective, from an in-house perspective, right? What do you feel that, beyond just, one is corporate tax, right? And beyond that what should, finance and in-house finance and tax teams do in order to ensure, that they're better compliant and they meet the timelines? What is something that you have done as a best practice to ensure that? Yeah.
It actually reminds me of my teacher when I was in the college, that you have to study throughout the year. You cannot just cramp up in one night. So whatever was needed should have already been done by now, such as making sure that your opening balance sheet was at arm's length, your connected person transactions are appropriately recorded at arm's length, you have appropriate documentation to support your intercompany transactions, and your positions are clear. You have basically sanitized your books and make sure that you are taking appropriate measures to prevent any expense that has a risk of getting disallowed because of lack of any appropriate supporting or documentation. Because even the strongest of this tax position can crumble at the time of audit if you don't have supporting documents or ways to prove that, yes, it is right. So I would say it should have been done by now, but if certain businesses have not done it, I think this is the time to sprint and make the best use of the time left to get in touch with professionals like you, consultants like you, and seek their advice in making sure that at least the high impact items are addressed appropriately.
At least one thing we know, that sprinting is something that UAE does best, right?
Yes.
So, Rahul, you mentioned some key areas, right? Is there anything that you feel is a blind spot maybe for some in-house or tax team, where you think that maybe this is something that is not so obvious but needs to be focused upon when trying to comply, with the upcoming deadlines?
Yes, Prateem, and I think this is common across the businesses in the region, and it originates because of the legacy systems. So businesses, they have defined way of doing things. Quite often I have seen that the practice of netting off income and expenses into the same accounts quite often does not give a true picture. So making sure that your accounts are appropriately labeled, you have properly described, say, nature of the transaction, so that any tax team, when they are doing their analysis, they are able to distinguish the expenses which are deductible versus non-deductible.
Yeah.
Small example could be if you are putting your marketing expenses into a GL where you are recording your entertainment expenses. Leads to a risk that your marketing expense could also get disallowed, because during an audit, they would just go by the nature of the account and say this is not marketing. And then you go about filing an appeal, objection, and that is an endless process of explaining then. But why to reach there? So the blind spots would be to look at your systems, to look at your accounting policies, accounts, making sure that you sanitize, you clean it in time, give appropriate direction, training, guidance, work with the accounting team, and highlight the importance to them, so that they understand why is it now needed and it is important to change. Initially, you or any of the business is quite natural to face a little bit of resistance, because then it would increase the amount of work which probably they would be doing now, but it is for the greater good and much needed.
Yeah, and very rightly put. I think the systems and accounting policies, we've assisted businesses where, we've been informed that it's a very simple, straightforward business. But when you dig a bit deeper and when you get to the ledgers, sub-ledgers, then you see that, okay, there are some inconsistencies there. And then it becomes a bit more complex. While, when you're looking from 30,000 feet, it's simple. But because tax rules don't look at, materiality, you look at the qualitative aspects. So that can get a bit complex.
And of course, as I said in the beginning, in order to judge or guess the depth, you have to get inside. You cannot measure the depth while standing at the shore.
Exactly. Very, very rightly put. So Rahul, to, final question, just to wrap things up, right? What do you see as the future of, a well-functioning, well-oiled, in-house, future-ready, in-house tax team, Rahul? And what measures do you think that needs to be taken to get there? Especially because the landscape is adapting and changing so quickly, right? It's not only from a UAE perspective, but globally as well. So what are some of those things that you want to see happen and that measures you have taken to make it future-ready?
Right. I'll again use an analogy for that, Prateem. Yeah. The tax authorities now are kind of entering into a Formula E race, which is quiet, efficient, and incredibly fast. So businesses, they also need to upgrade. Otherwise, you will not be able to match pace.
Yeah.
And we don't need to wait for such things to happen. We can just see around. Zatka nowadays don't give enough time to people to prepare the documents. They would send a query and expect a response probably in a week's time. Now, if you don't have appropriate systems to pull out those details, you would be really struggling.
Yeah.
So the need of the hour is digitalization, automating your tasks, making sure that you free your, colleagues' time, reduce the manual keystrokes, and let the human resources do what they can do better, which is analysis, forming insights, strategy planning, or thinking, and trying to make sure that you have robust compliance, you have robust documentation, and you have basically covered all your blind spots. So this is the future, and this is how I guess all the organizations should move towards. And then only we can call ourselves ready for any audits or any questions, queries.
Yeah, and I mean that's so well put, Rahul, and I love the the bit about thinking ahead and having robust documentation, right? I know I said final question, but last one, right? Just to finish things off, just robust documentation. So I feel, Rahul, that do you think that, right now the deadline has come, right? Should tax team be audit ready already? Like you mentioned, timelines are short, right? So sometimes, we have seen practices even in other countries, right? Have the local file prepared later on. That when the query comes, get this documentation ready. I feel like you highlighted that, this may not be a viable way to go, but just want to get your perspective also on this. Yeah.
Well, of course, Prateem, there are different ways of looking at things and doing things. I personally feel that deferring it to a later time is not really a good idea.
Yeah.
You should do it when you are actually in the process of implementing things, because then all the, say, information is fresh in your mind.
Yeah.
And when you are preparing the documentation, it would be quite easy for you to just put that into black and white and create it. And while you are documenting and implementing at the same time, you may uncover areas or aspects which further needs review or discussions, which might get missed if you don't do it at that point of time and decide to do it later.
Yeah.
So, it's just like when we were in college, when you attend a lecture and then you come back home and revise it, that's the time that you make it permanent. But if you attend a lecture, don't make your notes and think, I'll revise it in the future, there are chances that you might miss quite a bit of it. And when you would be doing it then, it would require you more efforts than what it would have otherwise taken if you would have done it before.
I mean, great. And I loved your analogies throughout this podcast. And I think people can, really relate to them. And, with this, Rahul, thank you for joining us. It's been a pleasure to have this chat with you. It's been really insightful. And hope to see you soon again for another of our podcasts.
Again, thank you for having me, Prateem. It was an honor. And it was really a pleasure to talk to you openly about all these items that we are, say, facing on a day-to-day, and it's impacting all the businesses, I believe, in the region. So thank you.
Thank you, everyone, for joining in for another episode of Everything Tax. Do remember to follow us on our socials.